Good morning and happy Friday, everyone. It is the 15th of January 2016, 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Once again, I want to remind you the Trader Bite is simply my opinion. I consider myself a professional. I've been doing this for almost 16 years in a professional setting here in Chicago, and I'm sharing my opinions with you. And so I want to make sure you take that into context. Um, a lot of news overnight. Some rough waters. China is officially in a bear market. The Shanghai Composite fell 3.6% as the market's disappointed by a couple things. The fall of 3.6% overnight in the market in their market is marking a drop of 20% from the Shanghai high of December 22nd. New loans in China totaled 597.8 billion yuan, missing the estimate of 700 billion yuan. The market is disappointed mainly because they expected the PBOC to do more to support the falling economy. Crude has rolled to the H6 contract, which is the March 2016 contract. Crude has fallen $2 from its high overnight. It is below the low that we just put in the $29 handle. It is at new 12-year lows. The March contract is trading higher than February because of the premium difference. So take that into context. But overall, crude is making new lows and pushing lower. BHP Billiton took an enormous write-down. BHP is the largest miner in the U.S. The mining giant announced it was taking a $7.2 billion write-down on its U.S. shale oil and gas assets. It's been investing heavily in shale oil, and of course that market has collapsed. This morning, Citigroup announced 1.06, $1.06 versus $1.04, expected 18.5 billion in revenue versus 17.8 billion. So it beat Wells Fargo, which is slightly bigger, reported Q4 $1.03 versus $1.02, expected 21.6 billion versus 21.7 billion in revenue. So it missed slightly. At 7:30, we got January Empire Manufacturing. This is generally a third tier number, but the number came in at negative 19.37 versus negative 4. And looking at a DAX chart, you would think that the bottom has fallen out. The market reacted very strongly there. At the same time, we got PPI final demand at a negative 0.2 in line, and year on year we got negative 1%. Advanced retail sales also came out at negative 0.1% in line. Retail sales ex autos came in at negative 0.1% versus plus 0.2. Estimated disappointment there. As far as what's ahead for today, we have at 8:15, which is in about 9 minutes, 8-9 minutes. We have industrial production month on month for December, expecting negative 0.2. And capacity utilization also for December, expecting 76.8. At 9 o'clock Central, 10 Eastern, we're looking for University of Michigan prelim for January, 92.9. 92.9 expected there. That is a high tier number. And then on its heels, business inventories for November expecting negative 0.1. So those are key numbers to watch out for as right after the market opens. As far as speakers and other events, Fed's Dudley just came out with comments. We're expecting Fed Speaker Williams to speak at 10:10, giving opening remarks. And then at noon Central, 1 Eastern, we're looking for Fed Speaker Kaplan in Dallas. That's what's on deck today. So that we've still got a few numbers ahead of us. Let's switch gears here and look at what we've got, what we did yesterday. I want to review with you first what was on the Trader Bite yesterday. This is about 16 minutes in. You'll see that the primary hypothesis is to test higher initially, test higher, potentially take out the overnight high, and then the expectation is for it to consolidate very quickly like we've been doing right here, and then to drop down and take out the overnight low, which I indicate here in the video. I'm writing white on white, drawing white on white, but the expectation is it would fall through, and then the target would be that 6650 HVN, which we have hit overnight instead. Let's look at, so that's what was expected. Now, let's look at what it actually did. I'm going to switch to a 4-tick Renko because 2-tick is just incredibly noisy these days. It's loading. All right. So here's what actually happened. So there we are. We tested higher. We didn't see as big a test as I expected. We tested higher off the open, and we dropped to the point of control. We bounce up to the mid right here. This is the first setup of the day. Pull back to mid, and then we explode through with a very large rotation. We explode through the low, as I had indicated, the overnight low as well, and we pushed down to 1871. We did not get to the target of 1866. We missed it by 5 points, and then we saw a very strong buyer come in and participants pushing pretty hard on price at that point. Notice that the delta is, it's steadily growing with price, but it's not moving as quickly off the bottom as we did. Case in point, here's your cross of the open, which is right here, and we still had a negative delta left. Price getting ahead of delta there. So it's moving on a lot more offers canceling than bids lifting at that point, compared, important to note, compared to how it opened. And so the market ended up pushing all the way up to the key LVN at 1905. I'm sure you're familiar with that price by now. Prices that should be familiar: 1905, 1915 quarter, and then above it 1922, and so on and so forth. We are actually, believe it or not, we are in balance. The market is actually in balance once it has made the lows. Once it has, it keeps pushing the lows by a little bit, but overall it is actually balanced. And let's explain that for a minute. How could the market be balanced? That's pretty insane. Well, here's the thing. Let's expand this for a minute. So we sold off in August. I'm sure many of you were here for that. We had lock limit overnight. Here's the balance for that period. This is late August all the way through mid-October. And the key value there is 1915 and a quarter. That's where we get that price from. Then we shift up and we go into this rally mode, and we do not take out the high, the previous all-time high, 2109. I'm just giving you context here. The 2109. We miss it by about 7 points. The highest high here, 2102.50. We attempt the high. We pull back, right back to the previous balance high, basically. to 2006.75. We tested it through the 2004 overnight, and then we make a lower high, and then we push lower low, caution, and then we make another low high. We balance for a little bit, and then we have this drop that we're experiencing now at the end of December through the month of January so far. Once we have this drop, we go into this small consolidation zone right here. And when I zoom into that consolidation zone, we see that the most valuable price in that consolidation zone, and I marked it in white right here, is 1915, the same price as the balance that was there. So what the market did is it rushed to the next value area, or the area that it considered to be fair, through August, when things got rattly and shaky based on account of China in the fall. And basically the market tried to push through, and then it found that it really value is still below. It mispriced those conditions through mid-October, November, December, and it's come back to this price. And what it's doing is it's doing what it's supposed to do, where it's not supposed to do anything, but what it's expected to do, which is to trade, to be stuck in the high volume node. And that's what that looks like, folks. So I talk about this a lot, paying attention to the point of control, paying attention to high volume nodes. These are areas that the market has accepted as fair in the past. And generally we go back to those areas, we push through them like we did here, right? And then we tend to fall back on those prices. Not only is the microcomposite point of control in this area 1915, missing the 1915 quarter all the way back from August through October, but we finished at that price yesterday. And we tried higher overnight, but the China news is too much. We had a fairly strong trend day. Yesterday's action looked to me to have it's 7 out of 8 pieces of a reversal day. So if I were a swing trader, I would be looking today for a swing long. That's changed in the overnight market, but really yesterday was a remarkable day because we tested below the prior day's low. But that's not really all that important. What's important is we tested below the trend day low back in October. Okay, we tested below that trend day low. We took it out by, I think, 2 to 3 points. And then we found an aggressive buyer on a higher time frame, a much higher time frame. And that aggressive buyer gave us what's called an excess low. Let me turn down my news feed. It's really loud. It gave us what's called an excess low. And an excess low is essentially the market's way of saying, hey, these prices are so cheap, I will buy everything I can find at those levels. And the market rejected those prices yesterday very quickly, and it went into trend mode. And auctioned very well, actually, while in trend mode. It auctioned very well. We did not have the normal point of control migration that we would see in a trend day. See, this is more like a trend day where we have a lot of, very small pauses as the market reasserts lower and lower prices and seeks lower prices. Yesterday, it came down, it tested below, and it balanced quite a bit up here. Why did it balance up there? 1915 again. It balanced quite a bit up here, shifted the point of control to 1913, and then it took out the high, and it came right back to that 1913, 1915 area, acting very orderly. But technically, this is a trend day. It broke only one side of the IB. It has doubled the IB at least. It has closed in the upper quarter of the day. A lot of point of control shifts, and it has not reversed on itself. and that's pretty much a trend day. You can have a lengthy profile where the market reverses on itself and closes back towards the middle or below. That's not a trend day, that's a normal variation day. But yesterday's action was a trend day on pretty good volume. The only thing that was missing was it had pretty poor delta. You could see the delta here was negative by the close despite the very wide price action. But overall, pretty healthy day. Really good burst right off the low, but it did not hold up. Again, the target below is 1866.50, but it did accomplish its purpose. I know I'm covering a lot here, but these are very key days to really see how the auction works. So what we have today is the market pushing down to 1862. It's trading that point of control. We are essentially, one more chart, we are essentially trading, we have traded below the October low. This is the October profile. Let me change the color here for a second. We've traded below the low. So this is October right here. This is the month of October. We have traded below October's low, and then we rallied back up to close up here. And right now we are trading below it again at 1866. We are tackling September's lows. We're trading in the high volume node of September, the month of September, and that's where the battle is right now. Nothing really below it once we get through. Once we get through, we have that spike down day from August, and it's gets fairly ugly for longs from there. The action overall, the big picture action, is that this is a consolidation in a long-term uptrend, a multi-year uptrend, but the structure is weak, and not to mention we have news articles or news announcements such as Walmart closing 100 and some odd stores across the United States. Things like that. Actually, Walmart's closing 269 stores around the globe, 154 stores in the U.S., and 16,000 employees will be laid off. Those kinds of things don't happen when growth is expected. And they're at the forefront of consumer activity, and without consumers, the economy essentially loses its strength. So these are big things to pay attention to. I'm not calling for, a crash or anything like that. We are still, in fact, in balance. But overall, it's not looking very healthy. It's looking like an intermediate term correction as opposed to a short term correction is what things are shaping up to be. Crude oil has fallen through its lows, through its all-time lows or 12-year lows right here. We're making new lows in crude, and we continue to push. It's trying to bounce up. There's also the nuclear issue in Iran has been lifted. The IAEA is supposed to announce today that Iran's compliant, which would remove restrictions on it to export oil globally, and there will be more supply there. So crude is just not having a good year so far. Again, now let's get to the hypotheses. Very difficult. This basically has thrown out all of my homework from last night, the action overnight. Very difficult to predict. The overnight profile is not looking like it's very healthy. The point of control overnight has moved lower. The volume overnight is very strong, meaning the participation was fairly high, and so it's looking like we are likely to push through. There's a high probability of initiative selling on the open. Normally I would look for responsive, meaning moving back towards the prior day's range and value. But today it looks fairly initiative. I expect this overnight low to be taken out And then, as we have done for the last few days, I expect it to base and then return into the prior day's range. The neckline of the action, the key resistance today is right here at 1895 for several reasons. This is basically a price action resistance point and a value area low from yesterday. Even though it looked like a profile day, we do have the bulk of the volume sitting in the middle of the range. I'm expecting that the market will drop, is likely to drop, then push up and then attempt to take out the 1895 if it finds those buyers again. And I do expect that it's likely to find buyers. I think there are bigger time frame players, institutional players who see value in these prices and keep bidding up the market. You could see it in your order flow. And I expect that it would be the same again in the absence of new information, kind of like the Newton's laws of motion. We expect things to continue in the direction they're going, and that's why things like the trend is your friend and so forth exist. So that's the primary expectation. I need to drop off. That's all I have for you for now. And then the other expectations are the typical responsive buying up to 1895, failure to push through, then rotate between yesterday's low and 1895. The range is expected to be in the 25-26 point range today unless we get more bad news. And then we have these numbers at 9 o'clock that are very, very relevant. So that's it. It's Friday. Watch your risk. Do not stake too much of your account on one trade. I've, as a risk manager here at Stage 5, I've had to intervene far too much this week to try to save people from themselves. It's just not worth it. Whether it's an error or not, take yourself out of the market before the market takes you out or your broker has to take you out. Good luck and watch your risk. Let's not go into the weekend with a big hole in our pocket. Take care.